Hi, welcome to the East Asia Econ YouTube channel. I'm Paul Cavey. I'm the founder of East Asia Econ. We're a platform that allows the monitoring and understanding of the big economies in East Asia with the aim of giving actionable insights to investors. Now, today I'm going to talk about some of those actionable insights, starting with what's happening with Taiwan and Korea over the course of the last few months. To begin with, though, I have 3 requests before I get started. The first, if you're watching this video and you like it, it would be greatly appreciated if you could subscribe and also share the video with people you know who might be interested. Second, if you are interested in what's happening in the economies of East Asia, then please check out our website, eastasiaecon.com. There's loads of stuff on there in terms of data and charts and things that you can download and look at to track what's going on in the economies. And you can subscribe to some of the periodic stuff that we produce. The third thing is, if you're a professional investor, then please get in touch. The website and the service is really designed for you. We provide a lot of analysis on what's going on with both the cycles and the structure, and hopefully that's a great insight to people working in the financial industry. So with that, without further ado, today I wanted to get onto the topic I want to discuss, which is what's happening in Taiwan and Korea. And the reason for talking about these two economies together is because usually that's the way it will be done. So if you look back, levels of economic development have been quite similar, for one thing. So they're kind of like these East Asia economies. They're smaller than Japan and China. There are some similarities between them in terms of the average levels of income in the economies. The second thing, and in particular today, is to look at actually why they've now become dissimilar. So looking at what's happening in the world, and particularly the excitement about semiconductors, you would think that the economies in both Korea and Taiwan would be doing quite similar things. And yet it's been very different over the course of the last few years. And I'm going to talk about Taiwan, where there has been this big boom that's happened really since 2020, and why Korea has been an underperformer during that trend. Now, that's all very well and good. That's the history. But what we really want to know in terms of markets is where things go from here. And there I'm going to talk about the upside risk for Korea, and in particular the theme being whether Korea is going to become the macro story that Taiwan has been in 2025. So that's the highlight today. Is that the way that we should be thinking about Korea? Are there upside risks? So first of all, to give you some context in thinking about this, the first one is to look at what's happening in Taiwan. Now, Taiwan has been probably the world's biggest beneficiary of 2 things over the course of the last 5 years. The first is the COVID pandemic, which saw the first big increase in demand for technology, in particular that work from home trend that happened in 2020 and 2021. In that period of time, Taiwan's exports started to increase very quickly. The second thing that's happened is that sort of work from home trend died away and export growth slowed down in 2023. But since 2024, exports have boomed in Taiwan once again. And in fact, this year, export growth in Taiwan is the fastest it's been since the 1980s. So to give that in context, that's faster even than the export growth that was seen during the great globalisation boom up to the run-up to the financial crisis in 2008. It's also faster than the recovery in exports that happened after the global stop in activity that happened around the time of COVID in early 2020. So it really is remarkably strong growth. And the way to think about Taiwan is it's the biggest macro beneficiary in the world of the push towards AI, of the demand for hardware that's happening from AI and this great adoption of ChatGPT and all these other technologies that we're all now using. And I think it's sort of underappreciated just how much this has mattered to Taiwan's economy. So the export side has grown massively. It's also been seen in a huge changes in the external balance. So we know that Taiwan for years and years has been this big saver. It's had a current account surplus really forever. It's a big net external creditor. External assets are equivalent to more than 200% of Taiwan's GDP. And even in US dollar terms, even though Taiwan isn't a particularly large economy, it still ranks 5th in the world in the amount of US dollar assets it has overseas. So that is all because Taiwan for years and years has been running a structural current account surplus. But even in that context, the numbers this year really are quite extraordinary. So because of this surge in exports that's happened, the current account surplus in the 3rd quarter of this year reached over 20% of GDP. If we look at, and that's likely to increase further in the 4th quarter of this year, because the numbers in October suggest that the trade surplus alone in October was more than 30% of GDP. The trade surplus with the US was more than 20% of GDP. So these are really huge numbers. Now, this has two consequences for thinking about the economy. The first is because it should matter for the currency. Now, I'll come back and talk about that because this is one of the big discrepancies in Taiwan macro at the moment. You have this massive, this very strong macro story, have ever increasing external imbalances. And yet the currency, after a false dawn in sort of April and May time, which we discussed on a previous video, where the currency did appreciate for a period of time, now we're back to around the currency trading around 31, 32, and very much in the range of 28 to 33, where the Taiwan dollar has traded against US dollar for the course of the last 30 years. Now, I think that's a discrepancy, and I think that's worth talking about. And an easy way to think about that is you've had these huge changes in the economy, but apparently it doesn't matter. Now, that feels unsustainable, and we'll come back and discuss that. But that's one thing. The second thing, and related to that, is it has affected the macro economy domestically in Taiwan. Now, this is a bit of a slow-burning story, partly because there's been this desynchronization of the export cycles and the domestic cycles in Taiwan. So again, if you go back and think about before the pandemic, what had tended to happen in Taiwan was when exports were doing very well, the domestic economy was doing very well as well. Now, what's happened since the pandemic, partly because of that work from home trend in 2020 and 21, which boosted exports, while domestic demand was being subdued because of the pandemic itself, since that time, the cycles in Taiwan have become much more desynchronized. And as a result, that makes the macro story a bit messier. But fundamentally, what we're seeing is before 2020, Taiwan had effectively deflation, a very similar economy to Japan. Since 2020, core inflation has averaged about 1.5% or thereabouts. The second thing is wage growth in Taiwan steadily slowed from the 1990s until the financial crisis. Over the course of the last few years, it's been steadily increasing. It's not a dramatic trend, but it is a real trend. And so what we're seeing in Taiwan is a real change in the performance of the economy. And you can see that most clearly if you compare the relative performance of the different economies in the region. If you look before 2020, Taiwan is an economy that looks very much like Korea in terms of the growth trajectory. If you look after 2020, Taiwan is an economy that looks much more like mainland China in the terms of the growth trajectory, much faster. And so again, I think the argument on Taiwan is it's the biggest macro beneficiary of the trends in tech that have happened over the course of the last 5 years. So that's some context. And the context for giving all of that is partly because we can think about what that means for the Taiwan dollar, but it's also because it matters for what's happening in Korea. So again, if you think about Korea, both in terms of levels of development and in terms of the export structure and what's happening with the semiconductor industry, you would think that Korea should be seeing some of these same trends. TSMC is the biggest foundry maker of semiconductors in the world. Samsung is one of the largest makers of memory. They specialize in different sectors of the semiconductor industry, but they're still both very big suppliers to the world. So in that context, you would think that all the things happening with semiconductors should mean that Korea is seeing the same sort of macro boom that's happening in Taiwan. And yet, until now, it just hasn't happened. And again, if you look at the growth trajectories of the different economies, there's no change in Korea since the pandemic. If anything, growth is even worse. And to give again, think about that in terms of some quantitative statistics. Between the June 2024 and June 2025, Korea's economy basically didn't grow at all. So this is despite the fact that in this period of time, Taiwan's export strength through the roof, that just didn't happen in Korea in terms of the macroeconomic performance. Now, there's a few reasons for that. There's a few reasons for the difference. So one is the domestic cycle. And so if you think about domestic dynamics between Taiwan and Korea, there's some important differences. So one is there was a lot more monetary tightening in Korea after the pandemic in 2020. That happening when household debt is already high in Korea. That's something that weighed on consumer confidence and meant that consumer sentiment and retail spending came down. The second thing, there was this whole series of different shocks that hit the economy, starting with the martial law fiasco at the end of 2024. There have been wildfires, there was a plane crash, there's all these different things that have weighed on consumer confidence as well that haven't been seen in Taiwan. So that's the second difference in terms of looking at these different economies. There's different things playing out. The third thing is that the semiconductor industry, as much as it is important in Korea, it is 20% of exports. It's significant, but in Taiwan, exports are 50% of the total. So, that suggests that you basically you need things to drive much harder in Korea than you would do in Taiwan. Now, even allowing for that, there's still differences. And the reason for saying that is really if you look at this chart. So chart is looking at semiconductor exports from Taiwan and Korea. Now, what you can see from this is that in Taiwan, there really is, a semiconductor super cycle, right? Or no cycle at all. This is just steady, massive upwards movement in the amount of semiconductors that Taiwan is exporting. If you look in Korea, there has been a lot of recovery in semiconductor exports over the course of the last 12 months or so, but it really looks much more like a cycle. So we've seen cycles like this in the past, and when the domestic economy isn't doing so well, and when semiconductor exports are 20% of the total, not 50%, and when the rest of the export sector is being hit by all of the tariffs that the US has imposed, that means that the overall macro story in Korea has been weaker. And that's where we stand today. So growth hasn't been particularly strong. The export sector, there hasn't been much growth. It really is a unremarkable story, in particular compared with Taiwan. So how are the risks around that changing? Why could we start to argue that Korea next year might be the same macro beneficiary of this AI trend that Taiwan has been this year? And there's a few things that are starting to change and point in that direction. So the first one is that, again, coming back to the differences in the semiconductor industries, Taiwan is Foundry. So that's the making of GPUs and other logic chips made on demand, made to order for specific buyers around the world. Memory is much more of a commoditized industry. So this is producers producing a load of stuff. For a time, there's supply dynamics, which means prices go up. Then there's an over inventory, which means prices come down. And that over inventory in Korea was very much seen after the big surge in the work to home trend and all of that. And so for a long period of time, DRAM prices and other memory chip prices were very low. Now that actually hid a change that was going on, because as that was playing out, it was always easy to forget that actually the memory sector is also a beneficiary of AI. And that beneficiary of AI was because all of the big producers started to make these HBM chips, which are particularly used in the AI supply chain. Now, that's important, and we can see it in, for example, if you look at SK Hynix, which is a smaller semiconductor producer, smaller relative to Samsung in Korea, it has performed amazingly well over the course of the last few years or so. And actually this year, its share price has outperformed even TSMC in Taiwan. Now, that's because it's a specialist in making these particular chips. Now, why is this important? Because if all the big producers in the world start to make these kind of chips, it makes that everything else in the memory sector start to become in short supply. And it's that's now being seen. So there's this period where it didn't look like there were supply side shortages in the memory chain in the way that we're seeing in the foundry sector. That now is beginning to change. And what we've seen happen over the course since early this year, sort of the second quarter or thereabouts, the DRAM price has had an unprecedented rise. So now spot prices for some of this lower end memory chips are about 5 times over the course of the last 6 months or so. This really hasn't been seen before. And it's this that is beginning to change the outlook for the memory industry. Now, as you will notice from the things I've been talking about so far, I'm really a macro analyst. I look at the economies. I'm not a semiconductor specialist by any means. And so it's important to bear that in mind when thinking about what the consequence of this might be. People with a tech background would have a much better sense of what this might all mean. But to me, it does seem potentially very significant for the macro picture. And we can look at that in various ways. One is because historically there's been, as much as this spot DRAM price is not an overall price for all of the semiconductors that Korea is producing. It tends to be a good leading indicator of where exports are actually going to be going. So this suggests a lot of upside risk for exports from Korea going into 2026. So that's one thing. The second thing, and something we haven't seen so far, is we haven't really seen outperformance from Samsung. So again, this is very much a company-specific issue, and again, there's people who would be better placed to be able to talk about that in terms of the specifics of what's happening at Samsung. But I think from a macro perspective, we can raise it because it is one of the things to be watching. Now, what's happened? And why does this matter? Because if you think the two big outperformers in terms of semiconductors in the region over the course of the last 18 months have been one, TSMC, second, SK Hynix. If you think about Taiwan relative to TSMC relative to Taiwan's economy, It's about 12 or 13% of total GDP in terms of sales. It's not a particularly accurate way of thinking about it, but in terms of the heft that TSMC has, I think it's quite useful to bear that in mind. If you think about SK Hynix in Korea, it's only about 2 or 3% of GDP. So it's a significant company, but it's not nearly as dominant. If you think about Samsung, it's much more like the sort of TSMC of Korea. It accounts for like 13% or thereabouts of GDP. It's a much more significant company. And so if Samsung doesn't perform, if it doesn't ride the semiconductor wave in the way that SK Hynix is doing and the way that TSMC is doing, it makes it very difficult for Korean macro to outperform as well. Now, over the course of the last, since August and September in particular, Samsung share price has begun to increase more quickly. It's come off a bit over the course of the last few days with the kind of global concerns we're seeing about the direction of the AI cycle. But nonetheless, it does look like performance has started to improve. So if that continues, and if the DRAM price remains very elevated, the risk for Korea's macro economy into 2026 start to look much more positive. So those are two things to be watching. The third thing to be keeping an eye on is what's happening with Capex. Now, Capex is important because if you think about Korea's economy, semiconductors are still only 20% of the total. You could have a boom in semiconductors, but is it really going to move the needle in terms of macro? If it's only exports outperforming, probably not. If, though, exports outperform in terms of semiconductors and that feeds into a Capex cycle domestically, that's quite different. And the reason for saying that is because we have a historical precedent. So basically in 2016 and 2017, again, there was a strong semiconductor cycle from Korea. There wasn't a cycle in anything else, so nothing else outside semiconductors was increasing in terms of exports. But still, there was a clear upcycle in exports, and as a result of that, there was a clear upcycle in domestic Capex. On the back of that, the BOK actually started to hike rates. When we look at things this time around, there are some signs that semiconductor exports might be starting to do better. It's going to be important then if that feeds into Capex. Now, again, so far that hasn't been happening. And again, the reason for that is this difference between SK Hynix on the one hand and Samsung on the other. SK Hynix's Capex numbers have increased very rapidly and it looks very bullish. Samsung's Capex numbers haven't done anything. So really a lot of this macro story about Korea, I think, is very much connected with what happens with Samsung. The share price starts to improve, suggesting that it's becoming a bigger beneficiary of this increasing memory price shortage that we're seeing. And if then that starts to get reflected in Capex, I think that really starts to have an impact on the macro economy for Korea next year. So what would be the significance of that? One way of thinking about it is to think about the Bank of Korea. Now, the Bank of Korea so far has been having a forecast that growth in 2026 will be less than potential, and therefore the BOK has had a loosening stance and suggests that interest rates will come down further. Now, to be totally transparent, that's been my view as well, and I think there's been good reasons for saying that. The labour market is very weak, wage growth has been slowing, inflation isn't particularly high, domestic economy has been quite weak. So those things will remain important. But the semi-cycle, I think, can start to become significant in terms of the way the BOK has to think about growth. And I think that's the thing to be watching for in terms of what happens with rates, and therefore the potential for that to implicate what happens with the currency. That the BOK's view and the way it starts to talk about the economy could start to change precisely because this shortage in the DRAM industry starts to get reflected in semiconductor exports, which therefore means the overall export cycle starts to improve in a very material way in 2026. That would mean the BOK can't cut rates any further, and potentially, if Korea does start to look like Taiwan in 2025, then there can be the potential that the BK ultimately has to start to raise rates. I think that's still quite a distant possibility, but it might be something to start having on the radar if the semiconductors numbers start to improve. Now, there's one other thing to talk about in this story, which comes back to Taiwan. And I think this is sort of the elephant in the room, if you like, that actually, if you look both at, actually across the region, all of the currencies remain very weak. That's true for the yen, for the CNY in China, for the Taiwan dollar, and for the Korean won. They're all very weak currencies at the moment, and that suggests that regionally, at some point, we're going to see an appreciation trend. But I think for the Taiwan dollar in particular, it's very important because you can look at Taiwan and basically say, and this is then therefore relevant for Korea, in a sense, it doesn't really matter, right? You can have all of this fantastic growth in one sector of the economy that can feed into the domestic economy as it has been doing in Taiwan, and yet it doesn't really matter for markets because nothing really changes. Now, I think for Taiwan, one of the reasons for that's been allowed to happen, or that has happened, is because there isn't really domestic overheating. Like, and I think the way to explain that is because as much as these big macro changes in Taiwan have been significant, it still is quite early days. Again, before 2020, core inflation only averaged 0.4% a year. It takes a while for the kind of the growth in the semiconductor industry to feed into the domestic economy. And therefore, I think actually Taiwan in 2026, the risks are quite similar, I think, to the risks in Korea, in the sense that the big thing to be watching in Korea is whether the semiconductor industry, the semiconductor cycle persists. Right? If it all falls over the course of the next few months and Nvidia's share price collapses, we're not going to be having this conversation as we move into 2026. If it doesn't happen and the semiconductor demand is very real, Korea looks like it could be starting to outperform as we move into next year. But that's also true for Taiwan. If this semiconductor cycle persists, then it becomes much more likely that the feed through into the domestic economy becomes bigger. And then potentially next year, we can also start to talk about rate hikes in Taiwan. And I think it's one thing for the currency to be undervalued when there's no need to tighten domestically because there's not that much inflation and not that much wage growth. But if we start to see a much stronger domestic economy and the central bank in Taiwan has to talk about hiking rates, then I think it becomes much more difficult to hold the currency down. So again, I'm Paul Cavey from East Asia Econ. I hope you've seen that we have a lot of actionable insights that we're working on at the moment, and a lot of this is available on the website in terms of some of the charts and analysis that we're doing. So again, please look at the website, check out what we do, and if you have any questions, then please get in touch with me directly. Thank you very much for watching.